Let's not say that, dude. Let's not say
No,
that.
no shade to any, but that is the reality. We can't be afraid to speak the truth without talking about the elephant in the room
There's
there.
also a general recognition that you shouldn't go too long without taking a shower.
I
We
mean,
funded yacht completely on credit cards.
yeah, right. Fuck
That's the
that.
connection. I'm like, what's the connection here?
Alrighty, welcome to Your Opportunity Co's second podcast. The question today is, are credit cards worth the risks? Selectively, however, many factors suggest no. What do you think, Nima?
Absolutely not. Hogan?
No.
I'm gonna go with a yes.
I don't mind them either. I'm also going to go yes.
Ooh.
I will say probably the only irrefutable pro of credit cards is the fraud protection when you're traveling. It's amazing versus if your debit card slash bank gets compromised, that money is seized for a very inconvenient length of time. Whereas if it's your credit card that is compromised, you you can flag it. Sometimes your credit card company will do it for you and no harm done. The money's returned, no big deal. So to me, that seems like a no-brainer. And with the whole idea of, oh, just one to one, if you can pay for something, pay for it over credit card and then just fully pay the balance off so you can at least get the perks. Well, the problem is most of us, or most people, I should say, especially in the education system, we're not taught financial literacy and discipline and to discipline their lizard limbic brain. So a lot of us are emotionally driven. We, impulse spend. So honestly, I think the average American just does not have the impulse control to responsibly wield a credit card without it potentially ruining their life.
Yeah.
That's the reality of most of,
Yeah.
you know.
Maybe we should run it back. Maybe we should run it back. We should run it back. Let's not say that, dude. Let's not say
No,
that.
no shade to any, but that is the reality. We can't be afraid to speak the truth without talking about the elephant in the room there. So that's why I said selectively credit cards are worth the risk. Selectively, because there are a lot of examples of it not working out.
Yeah, I have so many thoughts. For one, right, the joke is with your debit card, it's your money. So the bank isn't really inclined for your money, but with the credit card, it's their money. So of course they're inclined, right? The whole $50 fraud protection, where if you are liable for anything, it's up to $50. The rest is the bank will deal with it. You said something else though that I wanted to go back to, but I'm forgetting what it was. It wasn't the lizard brain piece. It was
Financial literacy,
not financial, not financial literacy. No, no. You know what it was? You know what it was? It was this. It was not not the wielding a credit card. It was that part, right?
the responsible
Yeah,
wielding.
yeah, yeah, yeah. Responsible wielding. So I don't know where I saw this. I don't know when I saw this. I want to say it was around COVID, so years ago now. But there was this thing where it was like this guy was just talking about credit cards and credit card use and credit card debt and those things. And the guy literally said a credit card is instantaneous wealth, which of course I laughed. I was like, there's no, I'm not gonna say there's no fucking way, but there's no fucking way. And but like honestly, I was like, instantaneous wealth, that's insanity. But it is true, it is instantaneous purchasing power. The only thing is it instantly becomes debt, which you then have to pay back. Right. And my personal reason as to why I said no is credit card debt itself is extremely expensive, right? The interest rates are crazy. It's something that once you kind of like get stuck in, you have a very hard time getting out of, right? Because it just compounds on itself. And that kind of debt trap you end up in with credit cards causes so much more damage to your life outside of financially. Like your opportunities are limited because you're stuck having to think about ways to pay your bill for the credit card, not how can I do different things. And so as a result, you're kind of like, oh, like I need to do this. Oh, I have to pay this bill, right? So it creates a situation where you can't see opportunities, you can't seize opportunities because you're too busy trying to just service a debt and pay a debt back. It's your past kind of following you in a way.
I must say the only time I did a cash advance on my credit card by taking out cash
Yeah.
against it,
Yeah.
it honestly felt like when a drug addict is trying to get their fix. If you're already in a position to where you're having to take out a cash advance, it's already you already basic financial literacy hygiene needs to be embodied, practiced, like if you're already in a position to take that out, because the interest on that is like 26 to 29%. So if you're already not able to pay your debts back, you are literally digging yourself a hole that you cannot
Chris is
earn your
working
way
himself
out.
into a lather here.
Yeah, dude, Chris. Okay, you're the legend, the expert on this topic, my friend. The floor is yours, please. Like,
Let's hear it.
No, no, no. Listen, listen. I've heard all of the reasons you can imagine over the last 25 years. I'm not for them at all. And Sabag, you hit on one of the aspects. It's about the responsible use. I mean, at the end of the day, we all know a little bitty piece of plastic isn't dangerous. It's the person that's wielding it. And primarily what I'd say is this: each their own. But only a small percentage of people actually pay theirs off each month. And if you want to get started on the point game, I can argue that I'm trying to behave. Nima made me promise not to choke or scream or yell. But here's the truth, and I'm gonna hush. I primarily say no to credit cards like any other debt just because I see it as a blocker. It blocks you from opportunities. It blocks you from maybe stepping outside of a job and pursuing more of a career. You might be stuck working a job just to chase some money, just to pay debt. So that's, to me, I see it as a limiter. And so I still vote no, and that's my final statement.
Okay.
Uh, am I next?
if you'd like.
Yeah, yeah. Those are all great points. The way that I fundamentally look at credit cards and credit card debt is like hygiene. So, in life, there are times when you just can't take a shower for a few days. And like we accept that we're not at our best during that time, like it is what it is. No one's saying that not having bathed or shaved in like a week is ideal peak existence, but it happens sometimes. So that's how I look at it. It's like you should be very strategic with when you don't bathe and shave. Hopefully you're not going on a date in anywhere in that time period. So the metaphor, for like life and business is, sometimes you need a little runway to like in my past experience, like work on your portfolio. I don't want to have to work a day job. I want to work on my portfolio, which can get me a job that pays 2, 3x working just some day job. So I'm going to take out a little bit of debt to, you know, to extend that runway and, like basically borrow a little bit of like, wealth and opportunity for my future
Yeah,
right now.
yeah, yeah.
So that's how I look at it.
Like a calculated bet. Chris,
Chris just puts the
Chris,
mask on. He's like,
Chris. Oh man.
no.
You dare gamble with evil boy?
Credit card Bane comes out.
Chris.
No.
Oh my God, that's too funny.
No, it again, mindset, right? And it's not, it's the use. You know, uh, People often talk about, they use it as a tool, and there are people that do successfully do that. I'm not going to sit here and say they don't, but just the average person doesn't. They struggle with it, and so being smart with a dollar, being smart with your debit card, is like being smart with anything else. You just want to have a plan, because if you don't, the system is set up to where it has a plan for you if you
Right.
don't have one for it.
Yes.
So
Yeah.
true. So true.
Where
You
we agree is be intentional. Like I completely agree with that. Like if you're gonna pull that move, be intentional about it.
yeah.
I
Yeah.
agree.
Don't try to get it on the right side now, Dario.
Yeah. I said what I said. I said what I
Stay on over there. Somebody mute him. Mute him.
I want to hear what you said, Nima, and then you too, Julian. But I wanted to agree with Chris in the sense of I like the idea of just removing credit cards off of the table, just as minimizing self-torture. It's like buying ice cream. It's like if it's in your house, you have to say no to it a million times. But if you don't buy it at the grocery store, you only have to say no
that,
once. So
that's
I
a really good
understand
metaphor,
And,
actually.
yeah,
that.
and dude, and
Yeah.
so you taught me that years ago, And that has been life changing for me. It is
Mm,
so powerful because when you say
mm.
no earlier to something,
Yeah,
the
right.
discipline is much easier, right?
It is.
It's not earlier, it's once. Just say no
Exactly,
once.
exactly,
Yeah.
exactly, exactly, exactly. Okay, so Dario, here's something interesting I kind of want to ask you about. And
Hmm.
that's what you were saying, so like, so you describe more runway, right?
Yep.
I'm a finance brother through and through, my guy. Yes, you get cash, but you got to pay that cash back. So you're to your point, you're borrowing from your future, right? You're borrowing that.
Mhm.
Last week we talked about kind of like educations, and we talked about needing an education and that kind of thing. One of the things we came to was if you go into a lot of debt for your education, it becomes a very risky move, right? Because the payout, the ROI isn't there. So I think what you're describing about this, not showering part, but the kind of like the getting a little extended runway part, right? I think what you're describing there is like taking a bet on yourself and taking a risk on yourself, right? Which is now it becomes a question of like what's someone's inherent risk tolerance, right? One person might be more willing to go into debt versus someone else who just doesn't want to.
Right. Yeah,
Yeah.
and that's what I meant to say with the hygiene metaphor. It's like we all kind of carry a different tolerance on how bad our hygiene is. We let our hygiene get,
Yeah.
So, there's it's a permeable thing. That's
Yeah.
kind of what I'm standing for.
Yeah.
But, but also it's inarguable to just say, no, don't get in debt, don't use
Yeah.
it, say no
Yeah.
once,
Yeah.
and you know,
Yeah. No, no. I hear you. It's good to
Well,
have contrarian views.
and the one thing to really understand, I think, to sum it up, in my opinion, is their interest can be your friend or it can be an enemy. If you borrow from your future self, or you borrow from a bank, the thing you pay back is called interest. So now interest is acting as a penalty. But if I invest and I save the money and I grow it instead of spending it or sending it toward debt, now I get a chance to grow it.
There you go.
And
There
now
you go.
interest that you earn, right?
Yeah.
And so it is. It is about being responsible, being smart, but more above all, guys. I think if it stops people from pursuing a better job or a better career for themselves, I've worked with a lot of doctors and nurses that because of student loan debt and credit card debt, they had to chase that income when their heart really wasn't in it. And so I just think overall, give yourself more options by having, the ability, to be able to and maybe go take a lesser paying job in an area that you're going to be more fulfilled. Or area where you're going to gain more experience because you're investing in yourself because you can afford to, you don't have debt, and now you can springboard forward in your career. And so it's a lot of options. But as we all know here, our goal is we don't want you to take a chance. We want you to grab the opportunity. And that's what we're about here at youropportunity.co.
Yes, sir. Yes, sir. Well said.
Hmm.
Well said.
Very nice.
Yes. Julian, I think, yeah.
Yeah, yeah. Let's hear it.
Yeah, I think I like credit cards because I think it's like establishing a system of like kind of trust between you and the bank, in
Mhm.
terms of like paying it back. I mean, the bank will literally reward you for having paid it back in time consecutively by getting you more credit to spend. I mean, it shows that like, that you're responsible with your money and you'll be able to, and all that. What is that? That's
go on.
scary.
Chris wants to do some sniffing.
No, no, I'm
And,
just
and in terms of
I'm
like,
listening
okay.
very
Yeah.
closely.
What's that movie, Scissorhands?
Edward Scissorhands. That's fun. All right. So, Julian,
You
Yeah,
know
there's
what?
that. And in terms of like,
You're
I
lucky
think the
you're up
other thing is
north,
like,
young man. There's
I've
still
gone south now, actually. No, no, I think the other thing is that I'm not really sure about this, but from what I've heard in my impressionable 20 years of life, is that in terms of like future purchases, in terms of like buying a house or
yeah,
things like that, having like a good credit score is like really good. Or in terms of
mm,
like buying a car, making a good investment.
yeah,
I think building that up as well is also very beneficial to your future. And if you do it like responsibly, as everyone said here, having a plan, being very intentional about how you use your credit card and how you pay everything back. I think that's also like another thing that it helps you invest towards your future as well because it lets you get things like a little bit easier. And I don't know, I really like points. I love points because I
Oh,
get to send free gifts to my
oh,
girlfriend from Amazon. It's great. It's amazing.
that's amazing.
Uh,
That's
The
cool.
Gen
so
Z,
yeah,
he likes his points.
Yeah, I was gonna ask
I
you.
love my points.
Yeah,
I love my
Julian.
points.
Julian, I'm so curious, like how like into the credit card game are you? Like what credit cards do you have? Like what's the situation?
I mean, I have a singular one, and I literally just try to like pay it back
Good, good,
as soon as I can.
good.
And yeah, I just try to like spam points on like Amazon because I can't really. I mean, right now I don't really have like I can like I mean, yeah, I can fly, so I should probably be saving it to like fly somewhere. But if if I need something for an emergency, or I need
Yeah.
to send a gift or whatever, free gift. So yeah.
Nice, 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 nice. It's interesting you said establishing trust between you and the bank. I when I was impressionable in my 20s, I also wanted trust with the bank. Now in my 30s, I'm like, we just you just hold my money and that's it. We don't need much more than that. Let's just make sure I can trust you to hold my money, kind of thing. It's amazing how much I went that journey as I kind of realized like, trying to build up that credit score ended up being a very expensive thing to do.
Yeah,
Uh,
that's the thing I was going to say is that it can become a very dangerous lesson. I'm a former collector, former banker, consumer finance, so I've been on all the sides of the track of this stuff.
That's where the mask and the scissors come from, right? From that.
You know,
And the black shirt.
uh, no comment,
Yeah.
no comment. But no, I mean seriously, the mindset around it, the bank is not your friend.
Yeah.
The bank's job is to earn money, and the bank's job is to keep your money protected. And so, you want to be careful, especially for younger people out there. I remember when I first got approved for my very first home, they approved us for 5 times more than I asked for. And at the time, it was this ego stroke. But in hindsight, looking at it, what it was is it was danger. I could have potentially overbought just because the bank saw the potential in me to get their hooks, to get their interest out of me, right? Later in life. And so you just want to be smart. You want to be very careful. But Nima, I tend to agree with you. I see the bank as a repository,
Yeah.
a place to hold my checking, my savings, and my money market account.
Yeah. Straightforward. And then so I was building trust with the bank. And then the other thing, Julian, you mentioned was acquiring large purchases. One, on motor vehicles, buy used always and try and pay cash as much as you possibly can. Because let's say you buy a new vehicle and you finance it. Let's say it's $25,000 and it loses half of its value. You just financed like $13,000 of just unsecured debt. It's like a credit card just floating there. Even if you try to get out of the car, you'd still be short and you have to find a way to get that money. So definitely don't do like new cars. Used cars are the move. Um, there is a company out there that allows mortgages to be had without needing a credit score. Um, we won't talk too much about them, but there is a company out there that does that. So it is possible to get mortgages without credit scores. So that exists too. Um, I think it's kind of like how we talked about before, where like there's the whole idea that like college scam. It's like, oh, it's college experience, like and it's kind of marketed thing. I think in some ways credit has the same thing behind it, right? It's a tool like anything else, and obviously to make money. And this is kind of a weird one because the way they make money is they effectively charge you and take more of your paycheck, right, for borrowing money, right? They market you these things like, oh, this aspirational lifestyle, right? Like there's this whole battle between American Express and Chase to have the better premium credit card between the Platinum,
Hmm.
the Sapphire Reserve. And so trying
Right,
to
right.
game each other, right? So it's all this aspirational stuff. Oh, I get all these credits, I get all this stuff, right? But no one ever stops to think, wait a minute, like, am I really getting actual value for what I'm getting with my card? You know? So I don't know. I think a lot about credit. When I did finance, part of the reason I got into it was actually credit. It was so fascinating to me. The idea of looking at different cash flows and trying to figure out, will we be able to get paid back?
Mm.
And another thing I think about a lot is the only thing in life is circumstances change, right? So if you take out a loan today, right, your circumstances are going to change in the future. They can change for the better or for the worse, right? But if they change for the worse, you're still responsible for that loan. That creates a burden on you in the future.
It's a negotiation between where you're at now and where you think you're going to be.
Mm.
Keyword where you think you're going to be versus
Yeah.
where you actually end up. And it's a bit of a gamble and a negotiation between, those two things. So that's where I was coming from, like,
Yeah.
with my experience with taking out some credit card debt that it took me a while to get out of.
No.
But but like I got value out of that runway.
Interesting.
So
Dario, I learned something about you today that I did not think I'd learn. You're more risk-taking than I thought you'd be, honestly.
Dude, you know what? I've been having people say that to me who've known me for years.
Yeah, yeah, dude. I've
Like
known you
my
for 20
friend Will
years.
said that to me.
Yeah, dude, I've known you for 20 years. I did not think you'd be as risk-taking as that. That's very interesting, actually. It's very, very interesting. Because I thought I would.
My friend Will said you come off like he says like there's farmers and pirates in life.
Yeah.
So farmers are very like low risk. They just put in the work every day and like try to grow slowly day by day. And then there's pirates that go after like the big bag and they take huge risk and big swings. So my friend Will's like, I always thought you were a farmer, but you're actually just a really low key pirate. And then Will, who dresses all flamboyantly, he's like, everyone thinks I'm a pirate. I'm actually totally a farmer.
So funny. It's so funny, dude. It's so funny.
Um, I was just gonna say, I think the only other drawback is, yeah, just that perception blind spot where you take certain risks when you know you only have the money that you have. But credit cards can skew and distort and
Mm.
warp your sense of what is actually within your reach. And yeah, that's a very like double-edged gamble and most of the time not in people's favor. So yeah,
Very
you really need to be sharp when hedging your bets with credit. Because like you said, a lot of people's journey to build their credit score was an expensive one, but and it's like, can you really say that the value from that would cancel out all the extra excess from the potential from the credit card range that you would gain?
mm.
Who's to say? But as long as, wherever your journey got you to where you are now,
Yeah.
it was a worthwhile endeavor. So it's, there's a lot of merit in both camps.
Yeah.
A lot.
Yeah, and see, and that's the thing too, right? There's no right or wrong answer here. Because at the end of the day, a credit card is a tool like anything else, right? It's how the tool is used that really drives it.
Yeah, and
You
your
know,
limits. Yeah.
is there any rule that says everyone should take a shower every single day? No, but like there's also a general recognition that like you shouldn't go too long without taking a shower. And where exactly you fall in that dynamic, that's largely a personal choice. I rest
Okay,
my
dude,
case.
you're epic, dude. You're epic.
Dario is not allowed in my home.
Good thing I'm.
We're just gonna put that out there. I'm gonna shut that
We're gonna
down.
have to hose Dario off. We're gonna have to hose him off in the mud room before he gets to step.
Yeah, I gotta take a shower before I enter his house.
Oh, all right, Dario, I had to say, this whole shower thing is a very stereotypical artist thing, low key, which
Uh-huh.
kind of makes me laugh. Like our resident artist, pretty funny.
I think in images and stuff.
I
So
like it, dude.
I like it. I like it. As far as tying whether or not credit cards are worth the risk to Yock, it's interesting.
I
we
mean,
funded yacht completely on credit cards.
yeah, right. Fuck
That's the
that.
connection. I'm like, what's the connection here?
Nah, nah. The connection is this. In our bylaws, in our operating agreement for the Opportunity Co., no debt allowed. It has to be a unanimous decision for anything over a penny. We were completely bootstrapped. We have not gone into debt for this business at all.
Mhm.
Refused to go into debt. Completely cash flowed. So no, just no. And to the
Yeah.
point that Chris made, I think you made it, we all kind of like got to this. Because of that, we've been able to make much better decisions, both for the product, for our clients, for candidates to go through our system, right? Because we don't have these external pressures on us to
Hmm.
deliver something or to get a certain amount of money to pay a bill back for a decision that was from a while ago, right?
Right.
So,
Yeah.
Or like forced growth, which a lot of
yeah,
startups
yeah.
end up in that situation.
Yes. Now, let's talk about this on a personal level, right? And Julian, this might be of interest to you. Um, so during my career, I started out very deeply in debt. Like I graduated from college way under. I was like, well, I need to get out of this. So worked like a psychopath to get out of it and stayed out of it and saved some money. And because I was in a position, going to Chris's topic of optionality, where I could kind of have a little more room, right? I didn't really have high overhead other than like rent and a couple just like standard, oh, phone bill, internet bill, like one or two subscriptions kind of thing, right? I'm a frugal person, right? I was able to have a lot more space to do things. And so when I realized I wanted to have my own business and I wanted to create Your Opportunity Co., I was able to just kind of go for it, right? Obviously still a challenge, obviously very difficult, right?
Right.
Obviously still its own journey, but the financial pressure is different, if that makes sense. I can't imagine trying to do this and having to service a loan or credit card or anything like that. Like I cannot imagine it. You know?
And how does that trickle down into designing the product
Yeah, absolutely.
so that's better and serves our customer
Well,
better?
think about it this way. We don't need to make money right away, right? Like obviously we want to make money, build a business and grow it, but we're not desperate to get cash to come in.
The threshold to sustainably keep Yacht solvent, which as a business, keeping your costs down while whatever money you do make,
Yeah.
you know what I mean? It's lean and it has the longevity to sustain itself
Yeah.
for that reason because there's no debt.
Yeah, and because of that, that's the product thing, right? We have more time to actually do things. We can be more present. We can be more aware, right? And we don't have to get into deals to just get some cash to pay a bill, right? It's not like, oh my God, I have to pay American Express $500 next month for whatever Yacht service. Where are we gonna get the $500 from? It's like, no, no, no. We paid for it already, like cash on deliver, money in, money out. Very simple.
When
Yeah.
we make a dollar, it's spent on the product, or it's, like
Reinvested.
Yeah,
meaning
it's
it's
literally
not
reinvested in the
going to
business.
anyone else. It's
No, no, it's
literally just
reinvested in the
going to
business.
improving our product. Yeah.
Yeah. Yeah. We care deeply about that. We care deeply, deeply about that. Yeah, I was gonna say, let me share a client story I heard today. You know? Um, so an organization wanted to hire a finance person and they had a candidate they identified. They're like, okay, let's assess them, see what's up. They did the assessment. The person took 30 minutes to do it, scored very high. They felt pretty good about this person. This person had transferable skills that were really strong and not necessarily the same background, like in terms of industry they were looking for, but everything else was really strong, right? They take our assessment, they look through it, and they look at the like feedback, like, oh my God, this is amazing. And they looked at the Q&A, they're like, wow, like this person is really thorough. And then they met the person in person, and the person who answered the questions was as thorough in person as they were answering the questions. And so like, wow, like the person you recommended us was the person we saw. And they even
Hmm.
mentioned to me, they were like, hey, we gave this stuff to the hiring manager. So hey, this is the person that you're gonna be hiring, interviewing, so on and so forth. And they're like, how did you get this? Right? So in that sense, like our product, Yox, Smart Assessments and Hiring Intelligence is really cool because it allows for the person to be seen, right, in real time.
From
And
a slightly different industry too,
yeah,
which is
yeah,
really hard with all these ATS walls right
right,
now online.
right. You know, and so this person's able to go through it, right? So talking about, let's say, credit cards and making an analogy here, right? Imagine being stuck in an industry like being in debt, right? When someone says, okay, you're in this industry, great, but like you just know this industry, you don't know this other industry, right? When you're able to show that you can get out of that debt because by switching an industry, let's say, right? You're able to then have more opportunity and more access, right? So tying it all together, we're increasing access to opportunity through transferable skills hiring too.
Love it.
Good stuff.
Thank you. Thank you.